What we're gonna do, guys, is of course we're just gonna walk through, not just walk through, but approach each session like Marcus and I, or at least me, if I'm running the call, Marcus, if he's running the call, as if this was a normal trading session. Of course, with some additional insights and guidance to keep us all on track, keep us all on pace. I'm gonna look through. So for me, I don't even click on Trading View first thing. Make sure I'm comfortable. Maybe a glass of coffee if you are a consumer. Whatever you consume in the morning, get it consumed. But first off, what I'm gonna look at is news, particularly, and as you see here, I'll start with our ForexFactory on our calendar and see what major economic news um, is upcoming for the given day, and then for the preceding week as well. But today is what I'm going to focus on in terms of today's trading session. Today is an FOMC week. And I'll get to the point where I'll be able to speak on FOMC, uh, who's involved, what they talk about, and why this is important to us at some point. I could mumble and jumble about it right now, but what I'll recommend for us to do is click on this little details folder here. And these give us a really, really good understanding of, at least a good superficial understanding of, at least why this folder is important. So for this particular folder, USD FOMC member Barkin speaks. Description Barkin is due to speak at Investing in Rural America, hosted by the Federal Reserve Bank of Richmond. Speaker, usual effect, more hawkish than expected is good for currency. I recommend you guys look up that term hawkish. Okay. Why traders care about why FOMC member Barkin is speaking. Federal Reserve FOMC members, so relate that together, right? That's an easy correlation we can make. FOMC members, so Barkin, if you look above here, Logan, Kashkari, Bostic, Federal Reserve FOMC members. So FOMC will relate to our Federal Reserve. Again, we don't understand the importance of that. Let us know, shoot us a DM, and we can break that down very, very easily, or put it in ChatGPT. That's something that we should all understand in terms of the Federal Reserve, what it does, um, and just at least a general understanding of how it operates. Uh, Continuing on, Federal Reserve FOMC members vote on where to set the nation's key interest rates. Big economic hot word right there. And their public engagements are often used to drop subtle cues regarding future monetary policy. And see, I'm kind of highlighting. So for me, I have a good enough understanding of this macroeconomic space to where, if I just read the Federal Reserve FOMC member, okay, cool. This part, okay, need focus on nation's key interest rates. That's important. Got that. And their public engagements, don't really know what that means, are often used to drop subtle cues regarding future monetary policy. Okay, interesting. So this could be how I'd interpret this, simply put, for all of us. An FOMC member, a member of the Federal Reserve, I'll put it like that, is going to speak. And since the Federal Reserve has the power to raise or lower interest rates, there could be certain cues or clues, or maybe not even anything that ambiguous or secretive. Like the word cues kind of thinks of something that you kind of like search hard for. Maybe not even that serious. I'm just saying that because I've listened to some of these things, but it's certainly kind of, there's a lot of smoke and mirrors going on for sure. But there's going to be a Federal Reserve member speaking, and they might drop some clues into some movement in terms of interest rates, which could give me some clues into future monetary policy. Okay, so that could be important for us, right? And so anytime at any FOMC week, we'll kind of step back a little bit. Any big FOMC week, we'll be on not super high alert, but we'll just be paying attention to exactly what we talked about, to these subtle clues that drop, and we're going to come back to this, and the subtle clues, we can easily access the bigger clues on this fantastic platform called Reuters. And Reuters is fantastically organized. So kind of what we'd be talking about in terms of monetary policy, Federal Reserve, everything like that, macroeconomics. We can go to markets. This is a good place for us to kind of look at things that are impacting the market. And Reuters, obviously, as you see in front of us here, much broader than just FOMC member Barkin speech or.
I can't see your screen right now. I just see your. I see your. Yeah, there we go. There we go. Yeah, so that's where you're talking about the markets.
Yep.
Yeah, Reuters. I love Reuters. I love Reuters.
Reuters is a fantastic platform, so any of those subtle clues that get caught, we don't even have to fucking be the ones to catch them. Other people will. And it will be displayed on here on Reuters and analogous platforms. So I'll go back to our Forex Factory here, and I'll emphasize before we open up TradingView that by and large, and I talked about this on our past Sunday class bloom growth session. What we'll be primarily concerned about is our red and orange. I say that lightly, intentionally, lighter than the red folders, because the color of the folder indicates the impact that it will have on the market, its perceived impact. So a red folder like this, unemployment claims, this is a folder we see week in and week out. We see it all the time. This is a really good one for us to be able to understand, expand, and read about. The red folders will have much more of at least an immediate and abrupt impact into the markets that we trade versus a yellow folder. So when 10 o'clock rolls around and FOMC member Musaleem speaks, the market won't necessarily react right away. It's going to be a light impacted folder. You see here, expected impact. Kind of see the scale there. So in that name, you can see today's Tuesday, May 20th. We have no red folders or orange folders. But again, bring back to my original point, FOMC, this G7 meeting, and FOMC weeks like this, FOMC meeting weeks like this, are reason for us to be maybe a little bit more tentative than we regularly would. Okay. All right, switch gears. So that is how I will start every single trading session, looking through the news, attaching economic news to geopolitics and geoeconomics, just to get an understanding of the environment in which I'm going to be trading in today.
Beautiful. Set the scope. Set the scope for the trading session.
All right, let's see what we got here. What that is. Okay. Getting a broad outlook here. I'm looking at the daily time frame on XAUUSD here. I'll start to go through what is called top down analysis. I'm gonna go ahead and we talk about being prepared. I'm gonna make sure I have XAUUSD. All right, we're in there. All right, so let's see what we got here, guys. In my daily time frame, no longer on XAUUSD. Here is XAUUSD. What I'm going to do here is just verify the levels in which I have marked up on my chart. And for me, for sake of cleanliness, I like to just mark up areas of inefficient price because these decision-making levels, which we'll inevitably talk about, are easy enough to see once you have the eye for them. Okay. Ooh, this one was actually kind of fascinating, the one that I saw yesterday. So areas of inefficient price. And again, in our classes and analogous content, we'll get into how to mark these up, how to understand them, how to read them, how to all the how-tos when it comes to what we're looking at here. But This is an active trading session. I want to represent in these Tuesdays, at least the Tuesdays that I run, what an actual session will be. Any phrases, terminology that you do not understand, I highly recommend that you have maybe another screen, another computer, or just another tab open of ChatGPT. And literally anything that you don't understand, or if you have the quote and me saying something, put in the ChatGPT, say ChatGPT, explain this to me as if I'm a fifth grader or a 5-year-old or whatever, and it'll break down anything that I say that you don't understand in exactly as if you're a fifth grader. And I think anybody who will watch this and engage with our content is a little bit older than a fifth grader or a 5-year-old. So I trust that everybody can gain understanding there. So again, here I'm just verifying my areas of inefficient price in and around the area, particularly where price is at or price could move to during the session. Again, nothing super impactful to hit the marketplace news-wise this morning. So I know that we located that. I'm noticing price. And if you just look at this space here, we are at an all-time high area. So there isn't much additional context to this area than right here in terms of establishing strong decision-making levels, um, and having just really strong conviction in that. But I will notice, you can kind of notice, and I'll just make this box here. Our price struggles in this area. Again, this is a daily time frame, um, and you can recognize the consolidation of price in and around this area. So when I'm looking at this area here, and as we fine tune, for me, when it comes to the decision making levels, um, I like to look and observe them on the higher time frames. But when we boil it down to the lower time frames, then I'll really get to see the micro opportunities in there that we'll be able to trade. Because if I quote unquote block off this whole area, that's you know 3205 to 3256. That's about 50 pips of room. There could be potential opportunities in here, but I will make myself aware, hence me doing this exercise, that this is an area where we've seen price potentially struggle, where it has struggled. Again, there's not much context here up in this area, right? We're at an all-time high area. So I don't have a lot of conviction, as much conviction as I would for a more established area in the level. Again, I'll look at those decision-making levels as we move down time frames. Let's bust through these areas of inefficient price. This one was interesting that I marked up the other day. Almost the exact same area of inefficient prices on the 5-minute as the daily, which you don't see too often. It's not super uncommon. Like if you look up at this 4-hour inefficient price, and we're on the daily time frame here, you'll see the 4-hour inefficient price doesn't quite match up, right? It doesn't quite make sense on the daily time frame. It's not really there on the daily. Figure out how to phrase that different, because it is there. It's a 4-hour area of inefficient price. And I'm speaking to the importance of doing thorough top-down analysis and annotating these little boxes just so we have an understanding of where they actually are. Move up one day, inefficient price, like that. It's a good level there. Bam, just like that. All right, then as we look below us, I can go ahead and mark this guy up here. And I'll put the box, and I like the light color gray, just so it's not super in my face. I like the cleanliness of things. To my chart. And we'll go ahead and extendo clip this guy right here. And then everything below this, like I said, in today's trading session, I don't necessarily see us getting all the way down here. But since I am here, we'll go ahead and throw these down. 1 day price. And actually, I kind of just like the IE. 1 day inefficiency. Look at that, adapting and adjusting on the fly. The IP is something I have done for a while, but I think I like the IE, one less letter. If you count the amount of time it takes me to type that P, probably not long, right? Maybe call it, let's say, a half second just to compute the P. Maybe that's long. But a half second, how many decision-making levels there are here? We're all about efficiency here at Bloom, guys. Half second time, 1, 2, 3, 4, 5, 6. Let's say I put 6 inefficiency blocks on my chart days. Let's say that's 3 seconds. 3 seconds a day times 5, 15 seconds I have saved in my week. 15 times 30 equals 450 seconds that I've saved in my week. And you times that by 12, I have saved 5,400 seconds just by not putting that P on there. That's highly efficient for me. Not really. But I do want to divide that by 60. 90 minutes. Not bad. Not bad. An hour and a half I'm saving on the year. Solid.
It's a lot of time.
It's a lot of time. It's a lot of time. I could do a lot with that free 90 minutes. Alrighty now. Alright, now let's look at this here. 4 hour. 4 hour. Looking for areas of inefficiency. I'll start at the top here and just show why top-down analysis is crucial, and annotating our boxes is crucial. Remember that 4 hour inefficiency up top there that just didn't quite line up and just didn't make sense on the hour time frame? Looky here, it just so happens that it fits very nicely on our 4 hour time frame, and hence why I had it on there. I promise I'm not too crazy. And then you can look at this box here, 1 day inefficiency. You can see it doesn't make sense, but it does on the 1 day, and that's important for us to know. 4 hour inefficiency, I'm gonna kind of fine tune that just a little bit. Alrighty then. Okay, I like that. And again, a very good resource for you guys to look at to help understand how to apply these in a more broken down way. Marcus has a very excellent video that I'm sure he'll put in the chat that we referenced last week, I believe. But about the force field and magnets in the marketplace. Very, very good video to help you understand why these levels of inefficiency are important, what they are, first off, why they're important, and how to implement their nature into our execution, amongst other things, such as liquidity and decision-making levels. Okay, I feel good up there with my levels of inefficiency. Right here, we look to be all filled up, decently balanced. The market will always look to balance itself and fill these areas of inefficiencies. These areas will act as force fields and magnets in the market. It's on us to determine which one they are at any given time. Now notice here as I move down to the 4 hour time frame, when we're looking out and we're kind of just doing a broad scope of the market, you'll see that you'll remember that I mentioned that this area, and even though I don't have much conviction on the higher time frames, as we move down the time frames, we'll be able to get a lot more conviction as far as the strength of the decision-making levels around this area. And you can see that consolidation and that stall, and that rejection of this area Again, this is going to be almost exactly the area that I highlighted on the 1 day time frame, on the daily time frame. So it's a little bit different, of course, because we moved down the time frame, but price is what's called fractal. Price is fractal. We're looking at the same things, um, just expanded, if you will. There's more candles, right? So each candle on the 4 hour time frame represents 4 hours of time. On the daily time frame, each candle represents 1 day of time. So you can see in if you look at the 24 hours, there will be 24 1 day candles. If you look at 4 hour um, the 4 hour time frame, you times that by four, so it'll be 4 times as many candles on the 4 hour time frame and the same amount of 24 hours in the daily time frame. I hope that can kind of helping us make sense of that. Let's see, we are trading in a. I'm gonna have solid conviction in this decision making level here. Again, for the sake of cleanliness, I don't like to put that on there. I'll just recognize it. And decision making levels, they don't fit into a one size fits all box. There's not one level. There are two levels, I could say, because top and bottom of the box, where this decision making level will stop, reject from, stall at. Um, we use the term decision making levels because around these areas, decisions can be made. Decisions to not just buy or sell, but to sit on your hands and do absolutely nothing and wait for price to move out of this area. So action isn't always completely necessary. Often not necessary. But okay. So our areas of inefficiency look good. So just kind of track here with me. So we got up this morning. I got up at 5:15, laid down for about 15 minutes. At 5:33, I walked outside the door. I walked about 200 yards over to the park. I did some lunges, doing a little lower leg rehab, lower leg back rehab. Did that for about 5 minutes. Then I did 10 pull-ups. I did a set of five, and then I did a set of four. Then I did one slow eccentric pull up, get the blood flowing, walked back home, opened up my computer. Okay, so here we are. That brings us to here now, to the beginning of our trade session at 6 o'clock. What did I do first? I opened up ForexFactory, got an understanding of what main macro data is releasing into the market. I'm going to be focusing on and looking for high impact, so red USD folders, or if I'm trading GBP USD, I might look at some GBP high impact news folders as well. Just all depends on the pair, but I'll kind of keep it as simple as possible, especially when we're trading USD involving pairs. I look for high impact, so red folder, USD folders. Okay, we didn't have any today, but it was an FOMC week, the G7 meetings going on this week. So that'll make me maybe a little bit cautious, and if not cautious, just aware that there could be some interest rate news coming over the next couple of days. So as I look forward to the rest of the week, that might be something I pay attention to. We looked at rooters just for a sec. Rooters will always be there whenever I have kind of a lull or a stall, or if I'm in a trade that I'm kind of sitting on. I'll just go to rooters and freaking click through articles, read them, see what I find fascinating, and go from there. And so then that brings us to me opening up TradingView. And step number one was to start at the higher time frames. Get a big, and I'll use macro here in a slightly different sense, a big macro wide lens view at the market. And here I'm focusing on XAUUSD. And then starting on the daily time frame, I go through areas of inefficiency and then assure my eyes have at least seen and recognized decision making levels um, in and around the area that we're trading today. I'm gonna give my voice a little rest. Marcus, you got anything, any feedback, any comments, areas of inefficiency, force fields and magnets? Um, you got anything for us?
Um, yeah, I got a couple things. Those force fields and magnets, those are important, like you said, to know. that yes, you can trade to these areas, you can trade away from these areas, but these are also areas you can say you don't even need to trade around. Um, and so like it makes when you're seeing price in a ranging, that real sideways choppy movement, it makes it easy to see when it moves away from those once you have identified a decision making level at that area. um so it kind of it simplifies the breakout, um or when the price really starts trending away from that area. But the other thing I did want to say too, just for the fundamental side for this session, there's no news. The speeches, those are super important. Um, like you said, it's not anything that's like super really like hard or complicated to understand. It's just the language you had to listen for. Um, but aside from that, there was something that came in over the weekend, um, which I wasn't familiar with this even being a thing. But essentially, the U.S. got their updated credit rating. So even though there's no news right now, the market has still been reacting off of that, because our rating got reduced from just, I assume it's just a tier below where it was. That just says that it's a higher risk when lending to us. Um, so that's definitely impacting the market right now. But yeah, that's pretty much all I got. I'm just looking at USDJPY right now, looking at some gold right now. Um, got my decision making levels marked, waiting for my VXT breakout, and yeah, going from there.
Yeah, and I was watching something about the our credit rating being dropped. So I guess so. I was watching this video, and I'll send you the clip. There's this
Mm.
Asian guy. His fucking wife asked him like these economic questions. It's kind of fascinating.
He's good.
Yeah, yeah, it was really good. And so he was talking about how there's three main credit determiners. Right, is Moody's is one. That's the one that just dropped, and then there's two others, of
Mm.
which names won't pop into my head right now without me looking it up. But just for the sake of this exercise, I won't do that. We say so. I guess one of them downgraded the U.S. dollar in like 2011. The second one in 2023, and then Moody's is just the most recent one. Is the there he mentioned it as just catching up to the other ones. So I thought that was interesting, and that's definitely something I wanted to look into. Um,
Mm.
but it definitely speaks to just the the debt and the trade deficit issues. So when we post things um, about the current administration making moves to resolve those issues, that is a very big deal. Very big deal. Us decreasing our trade deficits and tending to this massive amount of government debt that we have, uh, $30 trillion, whatever it is
Yes.
now. Um, so
Yes.
that's just speaking a little bit on the importance of um, yeah, the things going on.
Yeah, I'm dropping a screenshot in the chat right now of the other two. Um, and I think it's interesting that the date, and I see what you're saying in that video, like us, a Moody catching up, because we still have an additional A right
Mhm.
now with their rating, but the others are only on two A's and a plus. So like Moody still has another step to take, or or the debt improves and the other two agencies increase to the
Right,
same level as Moody.
right.
You know,
Hmm. Yeah, it shall be fascinating. It shall be
man.
fascinating.
Yeah. Don't get me started. Don't get me started.
But yeah, so we'll get back to the charts here a little bit. It's 4:45, halfway through. This one is called. Uh, okay, move down to the 1 hour here. I'm just not really going to mark anything up here on the one and moving down. Just going to kind of really get a look at the area in which I'm trading, particularly the last 12 plus hours, 14 plus hours since market open yesterday afternoon.
What do you mean by that?
Hmm?
What do you mean by the market opened yesterday? Didn't it just open this morning?
Negative, my good sir. Negative, my good sir. You're referencing the stock market. Two different markets that we're trading. On the forex market, there will be a 1 hour lull in the afternoon. I'm here in Phoenix. It'll fluctuate between 2 and 3 p.m. and 3 and 4 p.m., depending on the time zone that we are in. But this market is open 23 hours a day. And so what I'm referencing is market opening at, let's say, 3 p.m. yesterday, and moving forward up to where we're at right now.
Interesting.
Okay, let's see here. Okay. Analyzing, noticing this area, looking at these tops here, top, 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 top. Looking at this decision-making area here. You can see I have 1 hour decision-making level marked up and annotated here. Like I said, these don't fit into a cookie cutter box. Here's the top of this one, top of this guy, top of this guy. It's not at the exact same level. And so if I put this box here, this edge here isn't a definite edge. So I'm not, in my head, I'm not like, okay, if we touch this at the end of this box and go up, I'm gonna take a buy. If we touch this and reject it, I'm gonna take a sell. It's not quite that simple. But at the very least, we just have to understand that this is a decision-making level. We should be cautious of the decisions that we are making. Okay. And again, I'm going to delete that. Earlier on, I had a crap ton of things on my charts just in terms of every area of inefficiency on a daily, 4 hour, 1 hour decision making levels marked up. And it just got too damn busy on my screen. But over time, as you can get the confidence in me saying this, over time you just get the eye for it, particularly the decision making levels and the areas of inefficiency. It's very clear, and I will say obvious first to understand the levels in price in the market where price kind of consolidates, struggles, stalls. I like this 1 hour inefficiency here laid out for us a couple hours ago, 1 a.m. Like us potentially trading down into that, acting as a magnet to potential rejection from the top upper edge of this decision making level. Inverse VXT play. Where is my MACD? I don't know. Je ne sais pas. Let's see. Okay, a potential inverse VXT play up here in this area. I'll be looking at momentum here. And for me, that's the further along I get on this journey, the more time I like to spend on the higher time frames, especially as um, the macros start to come together and make sense, and uh, the broader macro trend, we understand the why behind the broader macro trend. Um, the good old saying, the trend is your friend. And people, traders, live and die by that. We don't necessarily live and die by that, but it's just something we do acknowledge in terms of assessing our risk. We talk about risk being on a continuum of not risky at all which is impossible to get to absolutely zero risk in this game. So you can go from no risk to you risking everything. And where we land on that continuum, on that spectrum, it's on us to determine that. So when you're executing trades with the broader macro trend, which we can easily see on our higher time frames, our risk, we slide a little bit more towards the not risky at all side of the spectrum. And again, we'll never get to no risk at all in this game. Please understand that. Don't get mistaken on my scale here. So whenever we're trying to relate something, I always like to relate it on a scale. That makes sense. Makes sense for my brain. So in that name, if I'm for me, if I'm sitting on the 1 minute, on the 5 minute for the majority of my sessions, it's easy for me to kind of just get caught up in the micro trends, right? The micro trends going on in the market. And I say we don't live and die by trade with the trend because there are micro opportunities for us, right? And as we get more skilled, as more knowledgeable, as our eyes get trained more, as we get better at assessing where we're at on our risk spectrum, because us trading with or without the trend isn't the only thing that impacts our where we sit at on the risk spectrum. Right? There's so many factors, which we'll talk about and go through extensively throughout as we continue on doing these live calls, doing our classes, our Sunday Bloom Growth sessions every Sunday, 9 a.m. These live calls at 6 a.m. And then Thursdays as well. Marcus, confirm time for me on Thursday for everybody.
Thursdays, we are live at 11:30. 11:30, we're live.
11:30 a.m. or p.m.
11:30 p.m. 11:30 p.m. We'll go to about 12:15 a.m. And yeah.
Solid. Thank you for confirming that. And so three opportunities to engage with us in a live setting, completely live. And so, like I said, we'll talk about extensively, in depth, inevitably over all the various concepts that affect where we sit on that risk continuum. It's just impossible to get to all of them in one day, and I don't want to throw too much out at you in one session. So I was talking about trading with the broader macro trend, me sitting on, preferring to sit on higher time frames, just when I'm sitting here observing the market, and even when I'm in the trade, I like to sit on this 1 hour when I'm in a trade, and this will get to, and I'll just build to my next point here. When I execute a trade, I'm going to execute the trade on the 5 minute, even on the 1 minute, just depending on the entry. But I really like entering when it's time. Okay, when I see an opportunity, I'm like, okay, I'm gonna get down to this damn 5 minute. Let's look for this opportunity here. All right. So I like to observe on, let's say, 15, 1 hour, 4 hour. I'm gonna toss the 15 in the trash there for the sake of the last sentence. The 1 hour, 4 hour, and then execute the trades on the 5 minute. All right. And once I execute the trade, I have my risk predetermined. I know what my risk is going to be like per my data my backtesting data that I've collected in my system. That won't be the same for everybody, right? Because everybody's ability to tolerate risk and capital in which they need to, have to, want to preserve is different from person to person. No two people have the same exact amount of risk because no two people live the same life. Yes, it is that interconnected, and it is that specified and unique to each individual and each trader. That's a point we always want to make very, very clear. And so as I talk about these things, as I talk about our system, my system, me and Marcus, we trade we trade the Bloom system. We execute it just a little bit different. We have different cues. We have different things that will, I'm going to speak simply here. We have different things that we'll look for and observe. Things that will carry a little bit more importance for me versus Marcus. Again, between me and Marcus, there's not much differentiation, if that makes sense, but it is different nonetheless, and it will never be exactly the same. Even us trading the same system for years, right? That's a point that I want to make very, very clear. So my point that I'm mumbling to get to is everything that we walk through, everything that I show you is subject to variability. But what is it subjective to? It's subjective to you and your back testing. But not just you, right? You are a different person, a different trader. But I'm going to throw in the back testing part. Back test these things, study these things, collect data points, paper trade, have conviction in every action that you do in the marketplace. Understand what's important to know. Understand risk, capital preservation, profit preservation. Understand those concepts, the importance of those concepts, and then continue to forward test, back test, and just have a high level understanding. A high level understanding gives us a high level of conviction, and a high level of conviction gives a high level of confidence to make trades in the marketplace. Okay, let's see what we got here, boys. So sit on the 5 minute here. Again, remember, price is fractal. Price is fractal. You remember the tops that we observed on the 1 hour time frame, 4 hour time frame? That's top, top, top. All right, if I zoom out a little bit further, that'll be even more evident. So this is the same exact thing we were looking at, but it's like on the daily time frame. Now we said on the 4 hour time frame, there's 4 times as many candles in the same amount of time as there would be on the daily time frame. With the 5 minute, there'd be 8, 9, 10, 11, 12 times 4. There's 48 times as many candles in the same 24 hours as the 4 hour time frame. You can look like we're looking at the same thing, but there's a crap ton more candles. Yeah, it makes sense. Price is fractal. We see gold trying to jump up here, trying to break out of this decision-making level. We have an area of inefficiency to be filled up here. We got volume. I wouldn't hate the buy here. I actually like the buy here. Let's see.
You talking about on price right now?
Yes.
Yeah, I'm in a gold buy right now. It's the price like we talked about before is different on gold futures, but I'm literally looking at this same exact chart. Like that's what's funny.
Mm-hmm.
My price is 25, 26, 32.60, and you're at what 32.57. So
Yeah.
just because when we're talking, I'll refer to gold futures sometimes. So just for context, it's just a different way to trade the gold. That's all you need to know at this time, but it's gonna be the same price movement that we're looking at.
Yes, sir. Yes, sir. Okay, so I put this long tool down, which when I recognized the buy and when I would have pushed buy, right, I didn't get it quite at the top. All right, so I just want to make sense of that. So let's zoom in here a little bit. I'll kind of walk you through my sliding stop loss system and my capital and profit preservation system here. And so we see price has already exceeded 60 pips. And so for me, once price exceeds 30 pips, I slide my stop loss to break even. Right? Absolutely no way we can lose money on this trade now. Once price exceeds 60 pips, as it already has, my stop loss will move up to 30 pips. Right? So we're guaranteed profit, guaranteed 30 pips of profit. And I'm going to speak in terms of pips and not dollar amounts because I encourage you to look that up if you don't already understand that. Yeah. And so prices exceeded 60 pips. Now my stop loss is at 30. So let's see what happens from here. Good trade though. As this plays out, I will break down this entry in terms of what Marcus and I are both looking at and why we have conviction in this trade. Area of inefficiency to be filled here. I love that for us. Let's see how much of a magnet that turns into. I just want to verify. There should be a daily guy there. And so what that sliding stop loss system does for me is, and as that plays out, what I'm going to pull up real quick is a very, very fantastic tool in our platform that helps us just make sense of compounding and building and stacking good days and good wins, good executions, day after 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 day. Stand by, stand by, stand by. We'll pull that guy up. Hearts tab, resources. Sure. Let me pull this up real quick. All right. So you see, I started my paper account with $3,000. Everybody's account size is going to be a little bit different. Yeah. So account size. Put in your account size. Daily percentage increase. We like to shoot for that 3% a day range. Give or take, depending on your goals, depending on what you want to get out of this. That percentage will increase in this VXT calculator. And I think I pulled it up before. I showed you guys, but here in our community, left-hand sidebar, go to resources and VXT calculator. The 3,000, 3% a day is 261 trade days in a year. So this represents 365 days, so an entire year. And obviously, we can't trade on weekends. So that's what that accounts for. Reinvesting percentage, let's say we never take any money out during the entire year. We leave all of our money in our trading account. We never take money out of there. Daily percentage increase. Start date today is 05/20/2025. And so you look at this number here. All right, $6,724,142.41. If we compound this $3,000 in which we started the account with 3% a day for an entire year, we never take any money out. We started today, like we did. $6,724,142.41 will be in our account. Okay. And I want to make it clear that this is just this helps us get an understanding of compounding. This is not guaranteeing reality, or doesn't take into account the difficulties that are inevitable on anybody's trading journey, the L's, the lessons, and so forth and so on. But this just speaks to what's possible, right? At a mere 3% a day, which we could make on this move as prices blast through the sky. And now I'll kind of walk through this as well. So let's see what price is at. We'll implement my sliding stop loss system. 60. Now we got to 90. Yeah. My stop loss is now going to move to 60. So now 60 pips of profit. No matter what the heck happens, I'm putting in the bank 60 pips. Money. I love it. Love it.
Love it. Love a trade that ends in infinite profit.
You see, and now I
Or
probably,
yeah,
if it was me, as soon as this area of inefficiency was filled, I would have exited my trade. I would have exited my trade and collected that profit as that area gets completely filled. In my video last week, not last week, Yeah, and maybe I wouldn't necessarily exit, but I'd tighten that stop loss substantially.
And can you hear me?
Yes.
I'm looking at your VXT calculator right now. Does it make you change the share window?
Yeah. All right. So this is what I'm looking at here.
Okay.
And I'm tightening that stop loss. You see, this is where we entered. Plenty of a lot of profit there for us. Great entry, great trade. I'm just gonna move that and put a new long for here. Again, we'll look at this. Look at what this looked like a little bit closer here in a sec. But tons of profit. And for me, as soon as this area of inefficiency was completely filled, I'd exit my trade. Um, as this area of inefficiency gets filled, the odds are greater for price to stall, consolidate, or completely reject this area from now than it is to completely just blast through and continue on. Tons of areas of inefficiency created along this run. You can see area of inefficiency, area of inefficiency, and then we'll see on this next candle. I'm sure there'll be one as well. Really good trade there, really good execution. Um, yeah, max profit there, and we'll fine tune what that max profit was based on our entry. 183 pips on that move. Beautiful, happened really quick, within 10 minutes. Beautiful fill of an area of inefficiency. That's a textbook. It's textbook right there. Beautiful. I'm glad we got to see that.
You said 183 pips right there.
Yes.
That's that's in what, 3 minutes or 15 minutes? Excuse me.
Yes.
Can you just put that into some context? Because I'm sure people are wondering, like, as they figure out what 183 pips is, but just for simple terms, like, are we talking $100 like off of that win, $1,000? Of course, it depends on the capital you're putting in, but
Yeah. How would I want to paint out that context? Um, so what's it? What's one pip or 10 pips is what $100 on the
on a 1-0,
on a 1.0 on a 1.0 lot size,
so standard lot,
standard lot, and there's going to be a lot of nomenclature, and that's why I kind of
yeah.
sit in breaking this down, just because there's just a lot of nomenclature that I don't want to get into, just for the sake of this call and this live session. But for anybody that will watching this, and you don't understand what pips are, how to calculate pips, and how pips relate to lot size, just understand that the amount you will profit off of any amount of pips. So this 100, let's call it 180 pips, will depend on your lot size. All right, and the size of your account. The higher the lot size, the more you will gain per pip. All right, and the lower the lot size, the less you will gain per pip on any given move. So if you just have that understanding, I encourage anybody watching this to do some further exploration as far as that means. But just trust me when I say a 183 pip move, no matter the lot size, is a fantastic day. Is a fantastic.
Hmm.
Me making having 30 pip, like I said, my sliding stop loss system, I could have been taken out of my trade if it just bubbled down, took me out, bam, just 30 pips. Okay, that's good. That's a win. Um, and again, it just depends what our lot size is. Um, because I could make, depending on the lot size, a 30 pip win earn just as much as an 183 pip movement,
Yes.
just depending on what your
Okay.
size is. Um, and so if it sounds confusing, it can be, right? It can be a concept that takes some time to fully comprehend and understand. I'd say just spending time watching our live sessions, listening to us talk about pips, lot size, and just continuing to ask questions will be a fantastic way, probably the most efficient and quickest way for you to have a really high level understanding of pips, lot size, and how they relate to each other. And so what I want to get to now is the entry itself. So for me, 183 pips in a play. I love it. And I'm going to log this in my back test here, or in my forward test, in my forward testing log. I'm going to use my replay tool. And I'm going to make sure that my screen is on my chart. Yes, it is. Thank you, Marcus. Keep me good with that. I'm gonna move back down to here. All right, we're gonna go back in time a little bit. 7:12, so we have plenty of time to get through this. I'm gonna take 8 minutes on this, and the last 10 minutes, we'll just chat, close up the call, look forward to the rest of the day, the rest of the week, see what we got for coming for the rest of the week. And I'm gonna get rid of this long tool. All right, we're act like the last 30 minutes never happened. Like it didn't. We're looking. It's 6:45 right now, not 7:12. Crazy. We're living in the past right now. But remember, and I'm just going to kind of take us back a little bit. Remember, I was talking about the tops. This is the decision making level. All right, this is an area in which we'll make a decision to buy, sell, sit on our hands. But I'm observing this area. Remember, we had top, top, top. We talked about how price was fractal. So that's where we were at around 6:45, which is the time I'm representing with the price right here. I used the replay tool to move back some time. Okay, gotcha. Everybody's following. All right, and so let's play this out, right? Okay, so we know the decision-making level. I'm just going to put this. Remember, this one was a little lower. Let's just say, and I'm going to undo that. I'm just going to kind of do this in this kind of area here, right? Let's say this box here, and I'm going to change the color. This box here, and going back, of course. Just going to keep it right here for now for the sake of the exercise. This represents our decision making level, roughly. Remember, I said how this isn't like a cookie cutter box, cookie cutter point. All right. All right. And so, what am I looking for here for a buy? Marcus and I, we both talked about. I said, okay, I'm going to take a buy here. Marcus, okay, I'm in a gold buy as well. What the heck were we looking at? How were we reading each other's minds? No, but we're looking for very similar confirmations because we trade the same system. And so what I'm looking for here, when I understand this is a decision-making level, but what do we need to have conviction in a long? Because we know, obviously, we took a buy, we took a long position. We know the market goes up. We're looking back in time here and just kind of breaking down to the fundamental pieces of our confirmations here. And I'm going to start from right to left. What I'm looking for is this cloud here, and there's already some promising things coming that this picture we're looking at here. What I'm looking for here is a blue bullish cloud angled upwards with and previously we said just angled upwards, but that angle upwards or downwards is fractal in itself. As somebody told us a while back in a meeting, which I thought was a very good point. So we want it sloped upwards. And I'm just notating that change in terminology for my own brain. With the slope upwards of both of these red and blue lines, the span A and span B. So as this cloud develops, when I push play, look at the cloud. You see there already was a blue bullish cloud. You see it kind of turning red a little bit. But as I push play, let's see how that forms. I want price. And all prices is the candlesticks. The candlesticks is price. That makes sense, right? Candlesticks represent the movement of price. I want price above the cloud. Above the cloud. And for me, I do like to see some separation. And this isn't something we put on our confirmation list. But as we're bullish, we'll see that price is above this blue line here. That's what I'm going to call it. But main point there is price above the blue cloud. Then we're going to look downwards here towards our MACD. I'm looking for a few things here. One, if you look at, I'm looking for strong buyers volume, which is represented by this light blue on my chart. It's probably a different color on your chart. You can make whatever color you want. You can make it purple. You can make it whatever. But just have variable colors to represent the different natures of the volume representation here. But for this exercise, I'm looking for blue, strong buyers volume represented by this light blue. And what I'm also looking for is something we call relativity. So if you see where this MACD line is, all right, where the MACD line is, you see it close to this white line here, the white midline. And since we're close to the white midline, we have a lot of room to go up. All right. If you look back here in this area, you see our relativity is too high for me. Our relativity is too high. There's not much room for us to continue up. As you see, anybody that's traded before, it definitely can go up. It definitely can go up and 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 up. But we're talking about probabilities, and we're all constantly assessing where we're at on our risk continuum. So we have to stick to our principles, stick to our core confirmations. And of course, there are anomalies, but we're protected from the anomalies with the thoroughness of our system, our risk management, and our profit and capital preservation systems. So we have a strong buyer's volume. And of course, if we're going up, it's going to be green. I think that's kind of implied at this point. And then our relativity is not an issue. Right here, it's not an issue. If we were up here, it'd be an issue for me. I'd hesitate to take a buy right here in this area because our relativity is too high. And in this case, if you look directly down, there is no longer strong buyer's volume. So I'm not interested in taking a trade. But here we're setting up so perfectly. I don't have my cloud yet. I know this is a decision-making level, so there's a very high probability of price stalling, consolidating, or completely rejecting this area. But I'm going to trust the confirmations. Let's push plug. We're going to get to the entry point. Observe the cloud. Volume still coming in. Strong buyers line. Oh, whoa, 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 whoa. Back it up a little bit. We got went a little quick there. And you saw it. I reckon as soon as I saw the entry, is just stalled perfectly for it, waited for it. The market was waiting for Bloom to enter their trades. It won't wait too long for us.
Don't let him out there yet, please.
Okay. You see our blue clouds starting to come in. Our strong buyers volume still there. Relativity still not an issue. Okay, ladies and gentlemen, we have a buy here. And for me, you can sit on this buy. I like the confirmations here. We're trading with the larger macro trend. I'm okay entering here. But there's a thought process here, and this depends on where the heck we're at. Excuse my language. There are times where I will wait for this candle to close and the next candle to open to enter the position, given we've just broken out of a decision-making level. But since we're trading, again, our risk is on a sliding continuum, right? In this area and in this context, we're trading with the broader macro trend, and we haven't quite gotten a very good, significant move in this morning session. Our confirmations are great. We have a strong buyer's volume. We'll kind of go back through those. Strong buyer's volume is there. Relativity is not an issue. Plenty of room to continue to climb upwards. Look at our upward slope. Look how beautiful that is. Upward slope of our span A, span B. And we just know, and if I zoom in super close, you'll see this blue cloud forming. It's kind of hard to see, but it should be implied for us, right? You see, it won't even let me. There you go. You can see that blue sliver in there. You can hardly see. But if our slope is upwards, 95% of the time will be bullish. It'll be a bullish confirmation for us. All right, and so let's say right here we entered this position. Man, okay. What am I doing from here? Again, walking back through what we did live, yeah. The 30 pips. 30 pips, and on this long tool, if you look at this target here, 3.045, slide the decimal point over one, we're looking at 30.45 pips that this green area is representing here. All right, and then of course we know how it played out from here. We know what happened. Beautiful money, and it just, as you can see, it just jumped to where we're at now. It's because it wasn't that long ago. We're seeing price continue to bubble up here. Again, there's a couple ways you can play this. I talked about potentially exiting right here as soon as the area of inefficiency was filled up. There's a thought process you could do where, okay, I'm going to put my stop loss right here, and then just see what happens. It could pop me out. I could lose out on 15, 20 pips, but even at that point, I'll still have 150 pip win on this execution. I'm perfectly okay with that. So for me, depending on what I kind of had going on the rest of the day, or where I was at in my trading session, I would either close this out as soon as we filled that inefficiency, or slid my stop loss out significantly, leaving me a little bit of room, and then just kind of trailing this stop loss as we continue up. Thus securing more and more profit as we would have. Beautiful thing. All right, I'm really glad we got to see that trade entry. I hope that was thorough and simple enough in the narrative today. But Marcus, what you got for us? And actually, just one more thing. Just in terms of the exits that I want to get to, because we just talked about relativity and volume on our MACD. Look at our relativity now. Look how high up we are, especially as we're at the edge of this next up area of inefficiency. We know that these act as force fields and magnets. I'm gonna perceive this to be a force field right now. Why? Because of our relativity and because we're losing that strong buyer's volume. All right, I just want to make that point clear. So right here, right now, I'm exiting my trade. No more slides. I'm getting out of it. I'm going to secure that profit. And at that point, we're looking at a lot of a really good trade, really good trade, 250 plus on that entry. Beautiful.
Yeah, no, that was a beautiful trade. I literally, it's so funny, bro, because the way you're walking through it, I'm looking at the same thing. I'm doing these same things. Like I have a decision-making level right at like probably just right above where we are right now. And so I just slid my stop loss to a 2-to-1. So if price ends up correcting, it's gonna close me out in a 2-to-1, and I'll profit. So like profit no matter what right now. But then I did slide my take profit to that next area of inefficiency that you have marked up, just to, because worst case scenario, it corrects me and hits that 2-to-1. That sliding stop is so money. And we've said something for so long that, you can never go broke taking profit, and like just putting a system, a specific rule in place. That's one thing I've adopted from you, especially as of late. just putting some type of rule in place to be able to collect on your profit, but also give yourself a chance to, not hit the home runs, but explore more of the move, without feeling like now the entire thing is gonna just fall through the roof. But
Yeah.
yeah.
And then one point I want to kind of make clear, and and I mentioned this point before we started talking about this trade, and Marcus just alluded to it. How we trade exactly the same system, but the very minute details of our sliding stop loss, our capital preservation, our profit preservation system will be a little bit different. That's what's so important about this game. But why? Why do we both have conviction in our system? Because we have tested our system, our way of going about it in a way that makes sense for us and our brain.
Mm-hmm.
So anybody watching this, you have to do that. Don't just copy what Marcus and I do. It could be a starting point. You could have a preference. Okay, Marcus, that 2-to-1. Okay, that sounds pretty cool. Q, the 30 slide and stop. It's a 60 slide. Okay, I like that too. Just kind of go there. Use that as a template. What we're talking about here is not something that we just say, okay, adopt this and do it blindly because this is the way to do it. Because there's literally infinite ways, differential ways to kind of go about this thing. And then the last point I want to make, just in terms of the differentiation, is and the add on just the value of the system that we have. Marcus isn't even looking this. Look, Marcus isn't even trading the same market I'm trading right now. We're both looking at gold, yes. Marcus is trading futures, where I'm looking at the forex side of things, and it will relate to not just gold, but every other anything else we want to trade. Maybe it's SPY, various other things. And I'm not super knowledgeable when it comes to futures, options. Mark can be much more knowledgeable in those spaces as I am trading futures right now. But the point that I'm making here is the system that we use is designed in a way for us to, one, understand the big picture. If we understand the big picture and the direction in which the market will go, we're in shit. We're more than halfway there in being able to make smart decisions. But then when it comes to the things we look for in our system, our usage of the cloud, our usage of the MACD, both trading view indicators, and the 2 to 3 major technical concepts we'll look at and understand: areas of inefficiency, liquidity, and decision-making levels. Once we have an understanding of those 3 things, along with the macro, and then just our MACD and cloud confluence, those 5 things, like, we'll be able to make very, very, very intelligent decisions with that as our guiding principle.
Absolutely, man. Absolutely.
729.
Yeah, I'm getting price. I mean, lost some volume on this MACD. Price has not kicked me out of this trade yet, though. Yeah, but I'm glad first session that we changed things up a little bit. I really liked it, really enjoyed it. Tuesday, May 20th, we'll be live on the membership side of our community on Thursday. Yeah.
Just like that.
Pretty much all I got.
As Marcus said, Thursday, 11:30 p.m. We'll be live. What Marcus said, I don't trade on Fridays. Unless I just have that dying itch to. But more often than not, I'll be utilizing my time to review and analyze the previous week and upcoming week on Friday morning. So that late night Thursday session is money. 11:30 a.m. 11:30 p.m. Thursday evening, boiling into early Friday morning. We'll get into that 12:15, 12:30 a.m. range. That will be on the membership side of our community. And then Sunday, for our members, we'll of course have our Bloom Growth session, run by the man himself, Marcus Williams. But in the free community service side of things, like what we did today in this call, will be live every single Tuesday at 6 a.m. Arizona time. And we look forward to every second we get to spend in a live setting and doing the things and talking about the things we are fascinated with and passionate about. Yeah, starts all right here. But with that,
Yeah, we go over a lot just real quick too. And I know we're gonna end it. We go over a lot in the community that if something keeps coming up that we're discussing in the community, we'll incorporate it in these live sessions. So as much as we discuss inside of the chat and the chart breakdowns and the macro analysis, will just kind of help us turn these sessions into growth sessions for our community for our Tuesday lives as well.
yes sir, money. With that, I'm gonna sign off and get on with the rest of the day. Appreciate everybody tuning in. One thing about market, I even had the thought of not necessarily going live on YouTube, but posting these to YouTube, at least the community service ones. But to watch and interact with this live, we will always do these, at least for the near future, in our Circle platform. Just because we want you guys to engage and become as fascinated with this as possible. And we'll be here for you every step of the way, with our server community being our main hub, of course. But yeah, with that, we'll see you guys, community members. We'll see you on Thursday and Sunday as well. And we'll see the rest of you guys on next Tuesday. Appreciate you guys.
Peace.